Welcome to week 4. We are going to start today deductions. Deductions. So taxable income, which is equal to assessable income minus deductions. So whenever you increase your deduction, so if you reduce more uh, um, expenses from your assessable income, your taxable income will be down. It means you are going to pay lowest tax. So always that taxpayers interested how much they can reduce from their accessible income to make it lower tax. So we will see how that actually work. This one in our zero practice manager. Then we will come back to that in our slide. So when you go to zero practice manager, you can see Steve Smith. His taxable income is $50,000 and he's paying $7,467 tax. So this is we include in the income. Now we will go to the deductions. So you can see the deduction listed from the D1 to D15 with a different category of deductions. You can see car expenses, travel expenses, clothing, self-education, other work-related expenses, lower pool deduction, interest deduction, dividend deductions, gift, like that you can go the list. In the losses, we will talk later, right? So there are D1 to D15, there are different deductions available to minimize. So I will see for an example now, I will say you have the clothing expenses. If you say you have a protective clothing or whatever, so we will say you spend on $5,000. You can see your taxable income reduced by 5,000, your tax also reduced to 5,000. So the taxpayer is really interested how they're going to put this deduction in the D1, D2, D4, wherever to reduce his taxable income, which is significantly impact on his tax. If you take it out this 5,000, you can say he's paying almost $2,000 more tax. So this is called deductions, right? So we're going to use this in our zero practice manager under the deduction heading, all the expenses. The D1 to D15 we are using for individuals like Steve Smith. But if you're doing a business like a sole trader, you click that business. If you go to the down, you can see business income and expenses. You're going to include all the business income here in this area, and whatever expenses related to the business like a purchases and your superannuation, wages and all the stuff you can enter here. If it is not listed in this area, you're going to enter under other expenses, right? When you enter the other expenses, for example, I will say other expenses, $15,000, you can see 35 and reduce. This one for the sole trader. But if you're doing the partnership or company or trust, what's going to happen? You're going to create a separate tax return because this is the individual tax return. If you create the partnership tax return or company tax return, you will get it same kind of a format, right? That's almost same. So business income and expenses, you're going to enter into that one. But if you are a sole trader, you're going to use in a same individual tax return. Once I click the business, it will work. But if you're doing for a other business structures like a partnership or company or trust, you're going to do a separate tax return for that one. So you can see uh, almost same kind of a format you to enter your business income and expenses. Now we will move back to that in our original slide and see how that look like that. So we understand whenever deductions goes up, in our taxable income will down, and we are paying the lowest tax. So the deduction fall into two categories: general deductions and specific deductions. The general deductions involved with the general principles. You don't need to go to the not any specific expenditure rules. It's a general principles. If you satisfy that particular principles or legislative arrangement, you can deduct the all expenses. So in other words, if you say you are not going to apply particular expenses not going to be stated in the general deduction rules. General deduction rules, it's going to say principles or conditions. If you met that conditions and principles, you can deduct under the general deduction. If you can't deduct under the general deduction, you can go back and check with the specific deductions. Specific deductions mean that it will be very clearly stated particular expenses can be deductible or not deductible, what condition should be met to deduct that particular specific expenses. That's called specific deduction. Some expenses are we cannot deduct under the general deduction, but we can go back and use the specific deduction and deduct from income tax. The rule of climbing deductions. So what is the rule? Normal rule, when you want to deduct from your income tax, it should be connected with your income. If it's not connected with your income, you cannot deduct from your income tax. The good example is your birthday party expenses, right? Or in your any other wedding expenses. It's not connected with your employment. But if you work as an accountant, you are paying your CPA fees. That's connected with your employment. So you are working as an accountant. You purchase a little laptop and doing the work from that through that laptop, that's work related expenses. But if it is something your party and your family expenses, it's not going to be connected with your accessible income, so we cannot deduct. Only we can deduct any expenses connected with your employment income or investment income or your business income, right? For an example, you employed some people in your business, you are paying salaries and wages and commissions and superannuation, that can be deductible from business income, right? You work as you have a investment property, you rent it out and get the rental income, you're paying the mortgage interest for that particular property, the interest will be deductible. You are paying that council rate, that's deductible because that's very connected with that your income. So expense must be connected with the income to deduct from your income tax. Any private or domestic nature cannot be deductible. So all the jewelry you're buying, all of your, the food and meals and accommodations, normally not deductible if it is a private nature. So we cannot deduct that all that our party expenses and etc. Then we will move into the capital nature. So if you purchase a item in a capital item, for an example, car or building or that equipment, or any factory machineries that normally we considered as a capital nature, you cannot deduct immediately full amount. You must use that depreciation rule. Right, there are immediate write-off rules available. That's under the specific deduction. We will talk later. But at this point, you can say anything. If you purchase capital nature, you're going to go through the depreciation process. That may be a percentage depreciation, that may be an immediate right of provision, but we should go through the depreciation process. And taxpayer normal rule can deduct only the expenses from the expenses incurred in the same year. So in this year we spend that, we can deduct from this year income tax. But there are some different rules that's called prepaid expense rule or accrued expense rule. We will talk under the business section. For the individual like you and me to work for others, to deduct from your income tax, we must and deduct whatever we spend in that particular year. Right. Now, the last one, we should have a written evidence to deduct the income tax for the deductions. What kind of written evidence? Which is your invoice or tax invoice or receipts or court or bank statement. So you must prove that the particular expenses incurred and you paid, right? So that for that one there are different substantiation or evidence rule. We will talk down the track under the substantiation requirements, right? Good. We will move into that positive lamp of the general deduction. So as I said, there are two type of deduction we're going to talk. One general deduction rule, other one specific deduction rule. But the general deduction rule is going to give you two part. One is the positive side of the general deduction rule, other one negative side of the general deduction rule. What is the positive side of the general deduction rule is give you that more chance for you to deduct. the negative side, it's going to say no. Even though you satisfy the positive side, if you satisfy the negative side, you cannot deduct, right? So we will see what is the positive side of that legislation. So what they are saying, so that we just exactly this is coming from the legislation, but I will say in the user friendly words to you to understand, right? You can deduct from your assessable income any loss or outgoing. It's mean any expenses. Extend that. What is that? So incurred, gaining and producing assessable income. So as I said previously, you can deduct your expenses connected with your assessable income. If there is no connection between your assessable income and your expenses, you cannot deduct from your income tax. For example, you are going for a holiday for Bali, spend that all the money, that's not going to be connected with your assessable income. That's your holiday, right? You had a big party at home, birthday party or wedding party or anniversary party, is not going to be connected with your assessable income. Therefore, you cannot deduct. But anything connected with that your assessable income is deductible. For example, you are using your car to go and meet the clients. So car expenses will be deductible. You attend a meeting in other states for or within the state. You are traveling for a official meeting. The travel transport will be transport expenses including flight ticket or bus ticket or train ticket is or Uber charges or taxi fees is deductible. You're wearing a uniform to attend that your work every day. That's a with the logo. So that's when your uniform expense will be deductible. You're doing some high studies to improve your skills and knowledge to support your current work or improve your income from current work. That will be deductible under the self education. You may be used your phone or internet for work purpose. That will be deductible under work related item. So anything connected with your assessable income, the expenses related to your assessable income, it's meaning your income is deductible. So very open. Second part, if it is necessary to carrying a business, that expense will be deductible. As you can see, first part more focus on individuals. A. The B more focus on businesses. So what they are saying, the part B of the legislation, any expenses necessary to carrying your business that can be deduct from your business income. Right now we want to see what the necessary mean. For example, when you're running a business, you are purchasing your inventory item, you have that salaries and wages for that your employees, you are renting out the rent, your gas, electricity, accounting fees, bank fees, right? All the expenses you in your operational expenses can be deductible from your income tax, right? That's called necessary to carrying your business. If any expenses, if you think this is necessary to carrying the business, that can be deductible from your income tax. Now we will understand a little bit more about what the necessary. For an example, your client go away of conference and he spent on this accommodation $100 per night. So he stayed in a motel. So 5 days he stayed, $500. So he come back and give you the invoice. That $500 is climbable because he went for a business conference. It is necessary. The second time he went to the same conference, but he stayed in a five-star hotel and spent $1,000 per night. Now he come back with the $5,000 invoice to you to deduct from your income tax. Same conference, same place, travel, everything remained same, but his choice this time he changed that his mind. He's going to stay. He say stayed in a five-star hotel. Can we question him? Can no, I can only deduct 500. We cannot. So necessary mean only you are going to check that particular travel is the business purpose. It is necessary for the business to travel. That's more than enough for you to establish to deduct. So how much is he spend? That's not up to the employer. So we cannot we no need to that question about that. Employer can decide how much he want to spend. on that the employees or in their expenses. The good example, if you say, so in that case, so even he come with the $5,000, there are different substantiation requirements for $5,000. We will talk next week. Next week, if you above the threshold, what kind of evidence you should have. But 5,000 can be deductible. There is no maximum limit you to deduct for your travel expenses, right, or your accommodation expenses. There's a limit to determine you should have evidence or not. That's I will cover next week. So necessary mean if employer decide anything necessary for carrying his business, that deductible, right? For an example, uh, employers uh, making employees happy using the financial and non-financial benefits. Financial benefit we are paying through the salaries and wages and overtime and bonuses. That's deductible, very straightforward. Sometime employer may give a car for private use to that employees. When we give it to the private car to the employees, that can be deductible from your income tax, your business income tax, right? Not to the individual one. So when you are giving the car, so only you want to check if there's an employer-employee relationship, that can be deductible. There will be a fringe benefit consequences. We will cover that one under the fringe benefit topics. At this point, whenever you provide that anything necessary to carrying the business, to making employee happy, or paying to that accommodation and etc., will be deductible from your income tax. So necessary, it is depend on the employer's decision, not depend on the tax legislation, right? So you're going to prove that that particular expenses necessary for the business, or that necessary decision taken by employer, right? So for an example, you want to go to meeting to that from Melbourne to Sydney, you can go by car, or you can go by bicycle, or you can use that helicopter or flight. That's entirely up to you how to travel between the two places. Tax office question is your travel is the business travel or not a business travel. If it's a business travel, that is your choice to how to you travel, right? So necessary question will come up, the purpose of the travel. So I'm sure you guys understand what the necessary meaning. Now we will move into general, sorry, that's there's a cost of child care. So for an example, employer providing a free child care for that employees, so that can be deductible from business income. But childcare fee is not deductible for normal individual tax return. But the business, you can say that is necessary for me to making my employee more comfortable to work. Therefore, my decision is to spend some money on that childcare. Same as when in the previous example, we gave the private car to that our employee, use the car for that his private purpose. So same here we are giving the child care for that employee. So both case, you making your employee happy, right? That is your choice, which strategy you use to make your resources more productively used in your workplace. So therefore, the necessary question will come up, not about the amount, not about the expenses. Actual question is where we are giving. We are giving to that of my employee. That's fine. That's going to be a necessary for the business. Now we will come back to the negative side of that our legislations. Even though you satisfied in your first part of the legislation, part A and part B, right? Necessary for that expenses, necessary for your income, expenses necessary for carrying your business. Even though if you satisfied these two, but in this section under the general deduction, if you satisfy that negative side, you cannot deduct. Well, first one is a capital nature. What is a capital nature? If you purchase any capital item for your business, you cannot deduct under this section, right? For example, you purchase a truck for your farming business or your agriculture business, you purchase a truck. The truck is a necessary to carrying a business. Everybody knows that. We satisfied 81B. However, if you are a capital item, you cannot deduct under this section. So that's non-deductible under general deduction. So we want to go and see how we can deduct, because it's necessary. There will be a specific rules that's called depreciation rule for the capital assets. So we will check that one later. So at this point, even though it's necessary for carrying the business, your all the capital item, land and building and computers and equipments and motor vehicles cannot be deduct under the general deduction. There's a special rule we will talk down the track. Now, second one, the private or domestic nature cannot be deductible. As I said, your holiday ticket to Bali, or your birthday party, or your wedding party, so anything cannot be deductible because that's a private nature. You're purchasing at anything you are spending for your day-to-day living, like your Woolworth bill, your clothing, your travel, home work to home or home to work cannot be deductible. Why? That's going to be considered as a private nature. You may think that we are deducting some time from home to work, travel. Yes, there are some special rule for that. We will talk later. So at this point, anything private or domestic nature, you cannot deduct under the general deductions, right? In your normal clothing, you where you are living, you are paying your home mortgage home mortgage and interest. You are paying the insurance. So for your health insurance, we cannot deduct from in our income tax. That's going to be considered as a private nature. When I talk about the health insurance, you may ask, we are reporting in our health insurance that's some rebate purpose or some offset purpose, not for the deduction purpose. I will talk that under the Medicare. So any expenses you incurred to producing exempt income. You remember we talk about some institutions are exempted from the tax, like a Salvation Army or charitable institutions or some non-profit organizations. They are exempted from tax, mean their income will be not taxed. In that case, if their income not tax, mean their connected expenses also cannot be deduct from that exempt income. Exempt income mean taxable income is zero. So therefore, zero minus anything can we put it expenses is going to be a negative, right? Therefore, this section most of the time is silent. But however, you should understand there's a legislation in our A2C. Any expenses connected with the exempt income, you cannot deduct from your income tax. The last part is the very important. Even though if you satisfied A to A, B, C, and that first part, if you can deduct, but you cannot deduct if say you're going to come and say in the section D, these are the expenses cannot be deduct from your income tax, right? So we want to say, I'm going to the next slide, I'm going to list that what are the type of expenses. For an example, your client running a restaurant. So when you're running a restaurant, you must comply with that council rules and health and safety rules and etc. Council come and check, and they understand that your client's restaurant running with the non-compliance. They issued the $2,000 fine. The $2,000 fine, it is necessary to carrying the business. If you not pay that $2,000, you will be not that council will come and close your business. Therefore, it's necessary to pay that particular fine. However, that is satisfied that in your 81B, but it is not satisfied that 82D. It's saying that under the section 26(5), that fines and penalties imposed under another law cannot be deductible. What is another law? Any other Commonwealth law or state government law or council or any other regulations by that state governments and other departments and commissioners. If you get the fines and penalties, cannot be deductible from your income tax. So that restaurant owner who got the fine, yes, it's necessary to carry in the business, but he cannot deduct because he know is satisfying that part D, saying that fines and penalties cannot be deductible. So I will list the items what are what the type of expenses you cannot deduct in next to the next slides. Excellent. Capital nature, as I said, what is the difference between capital and non-capital purchases? The capital purchases mean it is not your inventory item. You purchase a item which is supporting to your business to producing accessible income over a 12 months period. Normally that's a rule, right? So if anything you purchase your land or building or computer or motor vehicles or equipments or machineries, if they support more than 12 months, we call them as a capital items. So whatever you capital item you purchase, you cannot deduct immediately. You must deduct over the time, because you are not going to this year only using. You are using that next 5 years or 10 years or 2 years or 3 years, depend on the capital assets. So you're going to deduct that one every year in a particular percentage or particular method we're going to use. We're going to talk that one down the track. However, if you spend any money on your repairs of your capital assets, that can be deductible immediately. For an example, you have a motor vehicle for the business, you purchase for $70,000. That $70,000 cannot be deducted immediately. You maybe deduct little, but if you do some repairs or service, $500, that can be deductible immediately. That's called in your repairs will be deductible. Sometime we rent it out or lease that properties. For example, you are rent for that your building. That's deductible because that's not capital nature. You just rent it out. You did not buy that particular building. Or you maybe rent it out some cars or motor vehicles for the business purpose. You really did not buy. You just rent it out. So rent expenses will be deductible. Repairs deductible immediately. But if you purchase the asset, the purchase cost will be not deductible. It's deductible under the depreciation rule, right? Total amount immediately cannot be deductible under the general deduction rule. Depreciating assets, as I said, that your capital asset you're going to deduct over the time. I will cover this topic in detail down the track. Now we will go to as I said previously, some items are completely prevented. It's mean even if you satisfied all of this legislation, you cannot deduct from your income tax. Number one, fines and penalties. As I said, any if you violated Commonwealth or state government or any other state, council rules, and if you get the fines and penalties, that cannot be deductible. However, if you are not involved with a criminal activity, if you defend your rights, and if you spend any legal fees, that legal fees will be deductible. For example, in our previous example, the restaurant owner who got the $2,000 fine, if we go to that file against the case to council, he said no, that's the council decision is wrong, and whatever money he spent as a legal expenses, that can be deductible from his income tax, right? Regardless of his outcome is win or not, that total legal expenses deductible if it is not involved with any criminal activity or indictive offenses. I will talk down the track. The provision of long service leave, annual leave, sick leave is not deductible from your income tax. We estimate in our total annual leave and long service and sick leave, we're providing some provisions every month or every quarter or every year to saying that this much of expenses we are expecting for that in our leave and annual leave. So that type of provisions cannot be deduct from your income tax. However, when you are actually your employee taking the leave, when you pay that annual leave payment or long service pay leave payment or sick leave payment will be deductible from your income tax. Higher education loan program repayments are not deductible. When you study in the university, you may get some HECS or help or a kind of loan from Australian tax office that a tax office will directly pay to your university. When you repay that amount, you are paying through that your salaries and wages, that cannot be deductible from your income tax. So health help education loan program, not deductible. Repayment of study loan. But we will give an example. For an example, you are studying in a university which is connected with your job, with the self-education expenses, satisfy all the requirement. You don't have enough money. Bank paid directly to the your uni fees. Bank paid directly to the your uni fees, say $10,000. In that case, whole 10,000 will be deductible because you're going to settle through the bank that particular expenses, right? You're not going to climb that you through the repayment. You can climb that full amount what is that bank paid for your studies, and then you're going to settle that money to the bank. When you're paying back any interest you paid for that loan, that study loan, that's also deductible. But if the ATO come back and pay that loan and pay that your tuition fees, when you repay, that's not deductible. That interest is not deductible. That whole amount will be not deductible. Travel expense. There are exemption in this area. If you study some vet courses, that's called vet fee help or fee help. That's different rule where I will talk under the self-education expenses. But if you get it help or HICS, that have you cannot deduct. The travel expenses relative accompanying. So when you travel for your business purpose or work related purpose, if your family members also join with you for a particular travel, that relative travel part will be not deductible from business income or from your personal income tax. Expenditure maintaining your family, that's as I said, your rent, your home mortgage, your Woolworth bills, and your clothing bills, everything will be private nature, cannot be deductible from your income tax. The membership fees you paid for the social or recreational or sporting clubs cannot be deductible from your income tax. What is this one? For an example, most of this community have a community-based organizations. That community-based organization membership cannot be deductible. Your gym membership, recreational gym membership, not deductible. So any sporting clubs like Adelaide Crows or Sydney Thunders, that club the memberships cannot be deductible from your income tax. So these all are considered as a non-deductible item. And then we will go bribes to the foreign or any others is not deductible. As I previously said, anything if you convicted for indictable offense, it means some criminal offense, you cannot claim that any loss or outgoing. It means your legal expenses or any expenses connected with your indictable offense, you cannot deduct from income tax. However, if you're getting some income from truck trafficking or gambling or illegal gambling, you must report ATO, but any expenses connected with that one, you cannot deduct from your income tax. Super contribution surcharge, or we call superannuation guarantee surcharge. So normal superannuation is 9.5 percentage of ordinary time earning. Employer required to pay to that employee's super fund in a particular date, that 9.5 percentage of that one. However, employer not comply with that particular rules or particular super contribution requirement, ATO can come and audit. After the audit, they will issue a notice. If you are any non-compliance, there may be, for example, if your employer paid less amount than what he required to pay, there will be a shortfall amount. So tax office can come and say, you want to pay the superannuation guarantee charge or surcharge. What is the meaning? There are three components in that one. One, that shortfall amount, how much amount he not paid, underpaid. That's called shortfall amount. Plus, it's mean actually required to pay how much paid, different between two, the shortfall amount. Plus, there's the administrative charge of $20 per employee, plus an 10 percentage of interest on shortfall. Together, this amount, all three component of this one called superannuation contribution surcharge that can you are paying to that employee that cannot be sorry you're paying to the ATO that cannot be deduct from your income tax, right? Entertainment expenses normally not deductible. When you're providing that food and meal to that your employees or customers, normally not deductible or suppliers. However, there are some exemptions. For example, when you're providing the coffee and water in a meeting, we normally call that one as a meeting expenses. When you're providing that normal the water and coffee in a office, everyone, that's called employees refreshments. That's not going to become as a entertainment. But if you go with the client for a lunch in outside in a restaurant, there you get a meal and alcohol and etc. That going to be considered as entertainment expenses. You cannot deduct from your income tax, even though you spend that money on your supplier or in your or your customer. But when we are giving that some lunch or others to that employees, that may be deductible under the fringe benefit arrangement, right? However, if you spend on the money on the suppliers and customers for the entertainment, it's been food and meals, normal rule is not deductible because that's entertainment. Car expenses incurred by an employee, as I said, your normal travel between home to work is not deductible, right? But if the employer provide the car, if you use for the private purpose, that's not deductible to you, but company or that particular employer may deduct from his income tax as a business expense under the French benefit. We will talk that topic under the French benefit. Now we will moving to the business deductions. Right. So most expenses incurred running a business can be claimed as a deduction. As I said, necessary to carrying the business as can be deductible. So we will see there are two type of expenses. One the type of expenses can be deductible immediately. Any expenses necessary to carrying day-to-day expenses, your operational expenses can be deductible immediately. We call them in tax income expenditures. For example, your employees' wages, inventory purchases, all the operational expenses, gas, electricity, accounting fees, bank fees, right, and rent. Everything will be operational expenses will be deductible. You can see employee wages and expenses, inventory purchase, and operational expenses list of things. We can say I will in the next slide you can see all the list. So all these expenses can be deductible because that's your day-to-day operational of your business. It is necessary to carrying, you can deduct. However, as I discussed previously, anything prevented you cannot deduct, like a fines and penalties, not deductible. Your provision of annual leave and long service leave, not deductible, but actual leave is deductible. So that's the day-to-day operation. Second one, you purchasing some item to support the business over a number of years or more than 12 months, like your machineries and vehicles and computers and land and building, this type of stuff. This type of the items you cannot deduct immediately. But the normal general rule, you must deduct over the time. We call that one declining value, or that sorry depreciation method. That may be a declining value or prime cost method. We will see we can deduct. So there are some special rule under the immediate deductions. We will discuss under the depreciation section. What the immediate right of rule, how we going to deduct. Some business expenses are not deductible. Number one, the money withdraw from the bank or borrowed from the business by owner is not deductible. What happened? That's anything that's a liability item. As I said, if you borrow any money or if you pay any money from that borrowing and lending, considered as a liability item, is not going to be deductible from your income tax. Loans for the business makes, the actual loan amount is not deductible, but however interest you pay for the loan can be deduct from your income tax. For example, you got the $100,000 commonwealth from the Commonwealth Bank to run your business. That 100,000 is not deductible because that liability item, that's a loan. When you repay, that principal amount what you are paying is not deductible, but the interest component what you paying to that your loan is deductible. That's necessary expenses, but the other one that you settle that your loan, therefore it's not going to be considered as a expense. So when you get the loan, interest component, the business loan interest component will be deductible from business income tax. Whatever GST you paid for your business purpose, not deductible. If you registered with the GST, if you registered with the GST, that you can claim the GST from through your BAS. Therefore, your cost will be excluding GST. So for an example, your client purchased a car for $33,000 who registered for the GST, and how much how much the $3,000 he will claim from ATO. So only the cost is only $30,000. I will come back to the simple example. Assume that your client running a small cleaning business, he purchased this year $77,000 worth of cleaning materials. How much he purchased? $77,000. He gave you an invoice, 77,000 cleaning material. The first question you was asked, that you registered for the GST. If he say yes, he can claim out of 77,000, $7,000 worth of GST, he can claim from ATO through his business activity statement. We will learn that one down the track, business activity statement. So actual cost he is going to deduct from his income tax only $70,000, because GST, he registered with the GST. This particular invoice included in the GST. Therefore, he can claim through his BAS under the GST arrangement. So income tax only he going to deduct 70,000. 7,000 he is going to settle through that BAS, business activity statement. Second scenario, your client is also a cleaning business, but he is a very small. He spent $33,000 on cleaning material, including GST. However, he did not register for the GST. If he did not register for the GST, can he claim his GST from ATO through the BAS? No, because if you're not registered with the GST, you have no business activity statement, no BAS. In that case, you can claim all the $33,000 from your income tax as a deduction, because your actual cost is $33,000. Previous example, his actual cost only 70, because the other 7,000 he will get it back from ATO. But that your second client who is not registered for the GST, he cannot claim back the 3,000 from ATO through the business activity statement, because he not registered for the GST. Therefore, that his cost will be 33,000. That's including GST amount will be can deduct from in income tax, with the reason he did not register for the GST. Now we will move into, as I said, I put it all the list of expenses in this list. So when you have the time, you're going to read it. All these expenses are deductible from your business expenses if you spend and if it is connected to your business, necessary to carrying the business. I listed most of the operational expenses we normally do. So these expenses can be deductible from your business income tax. You can have a 1 minute look while I have the water. Excellent. You have the PowerPoint. You can refer this one. So we will move into work-related deduction. This is for individual, like you and me, work as an employee. What expenses can we deduct? You can see home office, car, and different deduction. I put it here. So I'm going to talk every single one in more detail in next slides. Right. Today I'm going to cover home office expense, and I think other ones that your clothing, protective clothing or occupational clothing, or in your uniforms. That's the two area we will cover today. Most probably I will cover interest expenses as well. but down the track, all of this list will be covered in detail, right? So I will start with the uh, uniform. The uniform cost of buying and cleaning is mean if you purchase and spend some money, or the cleaning, your occupation specific clothing and your protective clothing, and unique and distinctive uniforms. There are three things we're talking about: occupation specific clothing, protective clothing, and unique and distinctive uniforms. If all three can all four, if you satisfied, it's been occupation or protective or unique or distinctive uniforms, if you purchase, your purchase price can be deductible. And if you wash or if you dry clean, that your cleaning expenses also deductible from your income tax. That's called uniform deductions. We use that under the in our D3 as a work related clothing, laundry, and like dry cleaning expenses. D3, right? So I will refer from now onwards which area you're going to cover. D3. So when we move into that one, so what I said, that occupation specific or protective or unique and distinctive uniform only deductible. Clothing generally is in private nature, not deductible. For example, you are wearing the white shirt and black trouser all the time. That's not the deductible. That's normally a private nature, right? So if the dress in a specific way work by itself not sufficient. For an example, if your employer asks you compulsory wear a white shirt and black trouser all the time, mandatory requirement for employment, even though that's a mandatory requirement, not enough to say that's a uniform to deduct from your income tax, because that's not have unique, that's not have distinctive feature or occupational clothing or protective clothing. So it's not enough to say employer saying mandatory clothing, it may be a not uniform. So the compulsory or not compulsory to wear the uniform is not the question. The question is, it is satisfying occupational clothing rule or protective clothing rule or unique and distinctive uniform rule. If they satisfied any three of the rule, that can be deductible from your income tax under D3 as a work related clothing. If you're not satisfied that protective or occupation or unique and distinctive uniform category, you cannot deduct from your income tax. So compulsory or not compulsory, it's not a question. The question is that this occupation is clothing or protective clothing or unique and distinctive uniform. If they satisfy any one of these conditions, that can be deductible. For an example, you are working in a university, the university have a logo with that a suit or a jumper. You purchase that jumper, right? So you put it with that logo, but university did not ask you to wear, that's not mandatory, but still can deductible. So non-compulsory uniform also deductible if that one with the logo and distinctive uniform feature. But compulsory uniform like a white and black shirt or blue shirt and that white trousers cannot be deductible because that's going to be a private nature. So what does the unique and distinctive mean? So that particular uniform designed and made for only for that employer. You can see Woolworths, Coles. When you saw that, you can say that this is a uniform from Woolworth. That's maybe with the logo or maybe with the design. You can see, for example, in the Big Bash match, so in Sydney Thunders or Adelaide or Melbourne, this all the different T20 teams, they have a different uniform, different color shirts. That is a identical one. Even though there's no logo, that design is only for Sydney Thunders or Sydney Sixers, right? So what is the meaning? That's a uniform. That's called unique and distinctive feature. Employer, when he's designed that one, normally go to us industry, he must register that one as a uniform. It's a very simple process through the online, right? When it's registered, that going to be considered as a uniform. So if you use that uniform for your work purpose, voluntarily or mandatory requirement, no matter, both cases will be deductible if that one unique and distinctive to that employer. Right? Type of uniform, we said that compulsory uniform and non-compulsory uniform. The compulsory uniform mean that employer asked you to wear, but that mean that uniform must be meet the condition of unique and distinctive. Just employer asked to wear a particular clothing, that will not satisfy that deductions. Only will satisfy that particular one is particular uniform will be unique and distinctive and registered with that OS industry and strictly enforced with the policy. Right? If it is a non-conventional clothing, if they ask to conventional clothing like a white shirt and black trouser, it's not going to be deductible. Non-compulsory, as I said very clearly, um, uh, is there's no policy to that mandatory. However, if you use that employers that registered uniform for your work purpose, that can be deductible. Occupation specific clothing. So a reasonable person in the community, when look into that particular uniform, if they can identify this uniform belongs to a profession or belongs to a trade or belongs to a vocation or occupation, that can be considered as a occupation specific clothing, right? No matter you have the logo or not, right? For an example, you are sitting in an airport, a pilot walking with a white shirt and black trouser and little hat, you can say, yes, he's a pilot. You are sitting in a coffee shop, there's a policeman walking, you can say he's from South Australia Police or Queensland Police or New South Wales Police. Based on the color and based on their uniform, their clothing, you can identify which profession he is in. That's called occupation specific clothing. So religious, so that you can see barristers and pastors and chefs, what they are wearing, there's a no logo, but still we can consider that one as a particular profession or particular trade or particular vocation. So no need to have any distinctive or unique feature for occupation clothing. Occupation clothing is based on the that reasonable person can believe this is the belongs to this particular vocation, right? So then you can see one example, a lab coat for that number of different professions. So therefore, that cannot be considered as a occupational clothing. Occupational clothing mean that very clearly that you can be identified for a particular uh, profession. Next one's going to be a protective clothing. What the protective clothing mean? A deduction can be claimed for a taxpayer for the clothing which is protect from the risk of illness or injury faced when you are earning the assessable income. Risk or injury. So we will see, for an example, you are working as a nurse, you are using the gloves. You are working as a nurse, you are using the non-slippery shoes. You are working as a construction workers, you put in the helmet. You're working as a factory worker, you're putting the steel capped shoes. So therefore, all the protective items what you purchase is called protective clothing that can be deductible under D3 work-related clothing, right? So it's not necessarily uniform. Sunglasses, the truck drivers and that Uber drivers, sunglasses can be deductible, but very clearly should be identified. There are relationship between that protective item and their job. For example, as a lecturer, I cannot deduct that sunglasses. I cannot deduct that my helmet because it is really not protected from your work. But if I am traveling as an accountant around that different regional locations, I maybe purchase a sunglass and say that's my protective item. People working under the sun, they're using the protective cream, right? That's called sunscreen. That's deductible. People work under the sun using the sun hat. That will be deductible. The challenge you may have sometime, that's very important. That should be a protective clothing. So, for an example, your client working in a factory, and he purchased a normal Nike or Puma or whatever Adidas shoes. That's very convenient to him. He purchased that one for $250. He come to you with that invoice to deduct from his income tax. Unfortunately, we cannot deduct that one. Why it is? That particular expense is, that particular item is not have a sufficient degree of protection, so that he should buy a that factory, the steel capped shoes, which is, he may say, that's very hard for me to walk, but unfortunately that normal shoes not going to give you that much of that sufficient degree of protection from that injury or illness. Therefore, anything you deduct, there should be a sufficient degree of protection. Normal shoes cannot be deductible for factory workers, because that's not going to give that sufficient degree of protection. You must buy that actual factory shoes, right? So this is one of the key area when you do the tax return. Most of this factory workers and cleaners, they will come with that shoes, with that normal shoes that cannot be deductible from your their income tax. That's so I put the listed items. You can see this, all the stuffs are normally is a uh, protective clothes. You can deduct from your income tax for the respective professions, right? Non-slippery nurses, shoes for nurses, not for accountants. So there are a number of items you can see here. No deduction allowed for purchasing ordinary clothes. Yeah, very clear. Sunscreen, sunglasses, I already explained to that one. So we have three rules: occupation specific clothing, protective clothing, unique and distinctive uniforms. All this will come under D3 of your deductions. In addition to that purchase price, if you use that for laundry or dry cleaning of your uniform, if you meet that uniform rule which we learned previously only, you can deduct your laundry and cleaning expenses. Otherwise, you have no uniform. You cannot claim for your normal clothing dry clean, right? Only you can claim if you have a uniform. That uniform you may purchase, or you may be that your employer give you free. Some of the institutions like TPG and etc., they are giving you that free uniforms. You did not purchase. Therefore, your purchase cost will be zero. However, that uniform you may be wash and dry clean, that can be deductible, right? So how much we can deduct? There are two rules. $1 per load if you are using only for your work related clothing for your laundry. Some people, some clients who is working in that health sector like a aged care or that's hospitals, they not have to mix with that their other cloth. So in that case, that will be $1 per load. Some staff, some normal professions, they mix with that the other uh, clothing. In that case, 50 cents per load. So maximum how much we can climb without receipt. You can climb any amount, but if you should have evidence. But without evidence, you can climb up to $150 for laundry, or in your other work related expenses, if it did not exceed $300, you don't need to have evidence. What I'm trying to say, so what is the rule for that laundry and cleaning expenses? You can climb up to $150 without written evidence or without any evidence, right? And you should meet that. Your other work related expenses will be less than $300. If we exceed $150, or if you exceed your other work related expenses more than $300, yes, you can claim all the amount, but you must have a written evidence to prove that that particular expenses happen. For example, your purchase of the clothing and diary records and everything, you should be show to that ATO whenever audit come up. But under the $150, new other work related items less than 300, you no need to. So other work related items excluding car, meal allowance, and award transport payments and travel allowance expenses, right? That's the rule for laundry. Now we will move into home office expenses. Home office expenses. Before moving, we will understand what the home office. So there are two type of home office. One, place of your business or place of your workplace, both together, right? Place of your business or place of your workplace mean that's your principal place of work, right? Or principal place of business. What does that mean? That whatever hours you are working from home, your employer paying to that based on the number of hours you work from home, that's called in your principal place of work. You have no any other places to do the business. You're doing all of your business office from your home. That is your principal place of business. Clear, everyone? First example. So after the COVID, you did not go to work. You are working from home 35 hours or 38 hours. All the 38 hours, if employer paid to you, your home is the home office is principal place of work. You are running a small bookkeeping business. You not go to that any other office and work. You work all the time from your home. You go and meet the clients outside, but you come back and do all the work from your home in a particular room. That going to be considered as a principal place of business, right? So that's called principal place of business, principal place of work. Second one, workplace as a convenient. You are working as an accountant in a city, in an office, 38 hours, you work over there. But when you come back to home, you look into all the emails, you did not finish some of the work from home and come back and finish it everything. That's called workplace as a convenient because employer did not pay you that hours you work after your normal routine hours, what you completed in your office. You come back and do all this work for your convenience. I know there's a convenience for the employer as well. You're doing all the work from home, but that's the way that legislation looked at one. So two type of home office. The office number one, principal place. Office number two, workplace of convenience. So there are rules different for both different place home office setup. So now we will come back home office. You can climb different expenses. uh, so I will explain to that in the next slide. There are two type of expenses. One called running expenses, other one called occupancy expenses, right? So occupant, the running expenses mean your utilities, just gas and electricity and water and cleaning and repairs of your equipments and declining value of that your computer and other all the equipments what you have, right? And purchase of the phone, internet, all the stuff fall under running expenses heading. Other heading called occupancy expenses. If you have not owned the house, if you rented the property, your rent, your mortgage, if you own the property, your mortgage interest, your land tax, your emergency service levy, your council rates, everything fall under occupancy expenses. If your home office is a principal place of work, principal place of work mean hours you are working from home, employer paying to you. That's called principal place of work. In that case, you can claim running expenses and occupancy expenses. But you can claim both running and occupancy. In the second scenario, you are working from home for your convenience. It's mean you are really that working all the 38 hours or whatever hours with the employer in their employer's office, but you come back to home and do some work for your convenience. That's called your workplace as a convenient. Only you can claim running expenses for that type of business setup. You cannot claim for workplace as a convenient home office. Your occupancy expenses cannot be claimed. So your principal place of work, you can claim running expenses and occupancy expenses. Your work as a convenient, you can only claim occupancy expenses. So now how much you can claim? That's the next question. So I already explained this part. We will say how much you can climb. As I said, you have the two type of expenses, one for the running expenses, other one for occupancy expenses. Both have different methods. The running expenses have a three methods. One called fixed rate method, other one called actual expenses method, other one called shortcut method. What the fixed rate method mean? The 52 cents per heating, cooling, lighting, cleaning, and declining value of the furniture. 52 cents per every hour he work from home. 100 hours he work in a week, sorry, in a month, or 200 hours he work in a month, that will be calculated 200 times 52 cents. That 52 cents for your electricity bill, your gas bill, your cleaning material, and your declining value of the furniture. Other expenses you can claim actual expenses what you incurred for your home office, like your phone bill, your internet bill, your computers, and all right. So you can ask me how much we can climb for my phone expenses or how much I can climb for my internet. I will talk that one as a separate topic. I think a couple of weeks time, how we going to divide how much the phone expenses, how much the internet expenses. So at this point, all the actual expenses for the phone and internet and computer and stationery and any other expenses connected with the home office can be deduct under the fixed rate method under part 2. Now, if you selected actual expenses method, you are not using the 52 cents. All the expenses you're going to climb based on the actual expense for the home office. For example, electricity. Last year, last year my electricity bill total $5,000. This year, I started working from home office 5,800. So additional 800 can become as a your home office expenses. Last year cash bill this much, this year this much. It's increased that my cash bill this much because of my home office. That's a way easily you can identify. So that type of explanation is going to be considered as a actual expense method. We are not going to use 52 cents or anything. Everything will be based on the actual. The last one, the COVID rule or COVID method, they introduce now shortcut method. Most of the people are very excited with this rule. However, you must understand that rule have some different from fixed rate method, right? They are increased 28 cents per hour. You can see 80 cents you can climb every hour you work from home, but that 80 cents include two group of expenses. Number one, heating, cooling, lighting, cleaning, and declining value of the furniture, same as that 52 cents in the top. Very important. You can see I put in the red your phone, internet, computer, every part to expenses almost included here. Therefore, if you use the 80 cents method, you cannot claim your separately your phone expense or internet expense or purchase of computer or that's declining value of the computer or stationaries or anything. So that may be a disadvantage using the 80 cents method sometime. So you want to work it out each client separately. So most of the time, we are using the fixed rate method. But however, you want to see each method, which one is going to give that more benefit. But especially when you use the shortcut method, you must know I cannot climb phone expenses or internet expenses or anything because already that's included in the 80 cents, right? Good. So we will move into that home office climbing occupancy expenses. As I said, if your principal place of work mean you can climb running expenses and occupancy expenses. Running expenses have three method, fixed rate method, and that actual expense method and shortcut method. That's good. Now we'll come back to occupancy expenses. When we can climb the occupancy expenses, your principal place of work. It's mean hours you work, they're paying to you. Or you doing the business from your home. It's mean you do that all the work for the business from your home office. That's called home office. If you do that conditions, you can climb your rent. If you are rented a place, for example 4 rooms, you one using one room for that one, you can climb proportionally. I will show you in a minute that formula, right? So that if you that how what is the proportional you can climb your home loan interest, if you rent it out rental, your insurance, your council rates, and any land taxes and emergency levy, everything can be climbable proportionally. For example, you rented out a house for $400 per week and 100 square meter house, 20 square meter you are using as a home office. So one fourth of that 25 percentage of your rent can be claimed every week. So it's mean $100 is deductible from your income tax per week. So 52 weeks you work, 52 times $100. So how we good? You can see based on that house flow area, not that house size, actual house flow area. For example, total floor area 100 square meter. Your study room is a 25 square meter. You can climb all the expenses 25 percentage. Right? That's called climbing your occupancy expenses. So I summarize everything what we discuss here in a one sheet, so you can look into that when you have the time. Interest expenses, when the bank, when the business is getting the loan for the business purpose, when they paid the business or work related purpose, that the interest what they're paying back, that can be deductible from their income tax, not the principal amount, only interest component. If you get the loan for your private purpose, like you go to holiday or buying a car or for private cars, that cannot be deductible from your income tax. Only can deduct any work related or business related loans from the bank, that can be deductible. The interest component can be deductible from income tax. Sometime we getting a loan for private and business together. For an example, you got a loan for your car, right? Purchase a car. That car you are using for Uber as well as your personal use. In that case, for whatever percentage you are using for Uber, that component of the interest can be deductible. Assume that your client purchased a $30,000 car, um, for Uber and private purpose, and 60% he is using for Uber driver purpose, and 40% is using for private. You can ask how I am going to determine 40/60. That's different logbook method. We will talk next week. But at this point, you say 40/60. We are using private 40 and business 60. So $30,000 car he purchased, and he is paying every month principal and interest. But interest component he paying $1,000 per year. So how much we can deduct from income tax? 60% is using for Uber. So 1,000 times 60 percentage, which is $600 interest, can be deductible from income tax. The prepayment of principal amount cannot be deductible. Only can deduct interest component. What is the proportion? 100% if you are using for Uber purpose, all $1,000 will be deductible from income tax. You using only for private purpose all 100%, in bin you cannot deduct any cents, right? I put it here, 3 examples, as you can look into that when you have the time. Gift and donations are the one. So we can deduct the gift from in our income tax. However, we cannot deduct that any amount you give to your family members. The gift should be meet 4 conditions together. All the conditions should be met to climb from your income tax. Number one, that your gift will should go to deductible recipient. Who is the deductible recipient? I will just click this link and share with you guys in a second. So you all can see the Debian lookup, and we, for example, see you will see World Vision, right? World Vision. So we will click here World Vision. So you can see, go to bottom, deductible gift recipient status. What they're saying that yes, he's a DGR item 1. What's the meaning? This institution is deductible institution. So what we can do, if you give to the World Vision, you can climb. So whenever client come to you and say, I want to deduct from I gift something to that particular institution or temple or school or that institution in my home country, that first you should check first condition, that particular institution. You can ask that the name of that one. You can type here the name of the business, right, in the here. When you type the name, it will come up here. Or if you type the ABN, whatever EC, it will come up here, that institution. You want to go and check that with that deductible recipient status. If the deductible recipient yes, yeah, condition number one met. Number two, you must see this is genuine. What is the genuine intention for your gift? You are giving a Salvation Army and ask, hey, put it my name as I sponsored this much, put some advertisement. That's not going to be a truly gift, right? Your intention should be no any material advantage from the donation, and you doing voluntarily to make it that particular institution, right? No any material benefit, no advertisement, no any personal connection with that one, right? In that case, you meeting the second condition, right? The gift must be deductible. Sometime when you do the tax return, the clients will come back and say, I am looking after my parents in my home country. I am sending every year $1,000. Can I deduct that one as a gift from my tax return? We cannot. Why it is? The parents are not a deductible recipient. When you search their parents name in the ABN lookup, it will not come up anything. Therefore, they are not going to be deductible. They not meet that. First, they may be a true gift, right? You're going to give the gift, but it's not the they are not a deductible recipients. Third one, that gift must be actual money value, right? So you should give the money or property and say this much of value, that one. So that's a very important. So other party should be easily valuable. The last one, that should meet that gift conditions, right? What is the gift condition? Maybe world vision, maybe a deductible recipient, but the money you give, the purpose should be satisfy the condition. This is, if you give the world vision or salvation or red cross, very straightforward, you can deduct. However, you must check that, especially when you go to the schools. Most of the parents, when they, if they want their kids in the private schools, they are paying a lot of money, up to 50 to $100,000 to the schools, right? They will come back with that receipt and say the school is a deductible recipient, private schools normally. Therefore, I want to deduct my that 50,000 what I paid for school from my income tax. They paid, they may say building fund or whatever reason they can say, but however, we don't know. School is deductible recipient. The money they gave is actually deductible purpose or not. How we going to prove? We will ask to the client, come with the receipt from that school. They must, the legal obligation for the schools or that whatever, whoever accepting that donation, they must provide in that receipt in the down, saying that this particular amount is tax deductible or not deductible. If they include that wording called tax deductible in the receipt, you have any issue, you can get the receipt as a substantiation and you can deduct. So you should meet all four conditions to deduct the gift from your income tax return. That may be your ABN lookup, check that ABN lookup and gift and all, etc. You may have other challenge. The clients may be donate to that their local community-based church or community-based temples or community-based organizations. These temples and organizations and churches sometimes not a deductible institutions, unfortunately. Really, they did the gift, right? So, for example, a temple development, they may give to $500. They thought I can deduct from my income tax. But however, that particular temple may be not a deductible gift recipient. In that case, we cannot deduct from our income tax. Oh, last point. So no need to any receipts or any check if you're giving less than $10. When you go to the shopping complex, you can see people putting the $2 or $1 coin. That maximum $10 you can climb without any receipts or any evidence as a gift if you give it. And other deductible interesting income expenses. For example, if you are running a share business, you get a loan, same as previously, that can be deductible. If you're getting some um, this is one of the good area. You can see your client maybe get some interest income. If they get some interest income, you can claim all the bank fees for related to that account. Anybody normally not do, right? Interest income, they forget about that second part. So the bank, if they receive that income from the bank as an interest income, that particular account, whatever bank fees, normally $10, $10 times 12, all the $120 can be deductible because that account giving that interest income, right? Expenses. Same time when you do the dividend or shares income expenses, that anything connected with your dividend and share income expenses can be deductible under dividend expenses. You can see interest expenses there and dividend expenses there in our deduction side. If you go to that in your D7, interest deductions, D8, your dividend deductions. So D7 interest deduction mean anything you have that your bank deposit or any other loan, that interest deductions will come up here. In your dividend deductions mean that will come under the D8, which is you can go and see in the XPM. If I can, I will share in a second. Uh, right, you can see dividend deductions and interest deductions. You can add here, click the plus button, and you add all the expenses. So what is the meaning? The depreciable expenses and other expenses, if you purchase the asset and if you pay in the interest, that's going to be come under that categories. So if you have a bank loan, if your bank fees and others, it will fall under other expenses. So you can include all of your dividend expenses. If, for example, if you're having a consultation with that a financial planner, or you pay some mortgage fees, you pay some commissions, everything fall under other expenses under dividends. So election expenses, if a next expenses will be election, it's normally go under other expenses in your worksheet. Election expenses mean a candidate who contests the election for the local council or state council or federal government. If they contest the election, if they whatever money they spend from their money, not from the sponsors, spare money, that can be deductible after the election, regardless of they won that election or not. Right? So that's not going to be happen. But whoever contests the election, they can deduct their expenses. But there are restrictions for the council election, $1,000. But state and federal elections are not restricted how much it is. All right. Cost of managing your tax affairs. Sometimes people doing the elections in the community-based organizations, that's not going to be considered as a election expenses. Cost of managing tax affairs. You're doing the income tax, managing your tax affairs, it will be deductible. So your tax agent fees will be deductible. Your travel to the tax agent and come back, for example, you're traveling a place by car or by flight or whatever way, you travel to the tax agent and come back, return, both way will be deductible from your income tax. Any litigation cost whenever ATO take that um, a legal action against you, you maybe go to the administrative tribunal, or you may use that solicitor or barrister, or any other legal expenses will be deductible from your income tax. Buying a text or any other textbook or any material for tax related to improve your skills is deductible as a taxpayer, not as a student, right? As a taxpayer, all this will be deductible. You plan to attend a tax course to improve your tax knowledge, still deductible. So there are three different type of interest ATO can charge to the client. What's called general interest charge, which is applied for the date which is due to the paid until accrued interest rate will be paid. Another one, shortfalls interest charge. Other one for late payment interest charge. You can read it out. What is the meaning of each category? All these three interests, what is ATO charging to that your client, can be deductible from your income tax. Normally, no need to search this one. When you do the pre-fill option, automatically will be fall under cost of managing tax affairs, right? So that's called cost of managing tax affairs. I think that's we move into the last slides now. Say to thank you, and you just practice all the homework this week. And we started already the deductions. The next week we're going to involve with the car deduction and other specific topics. Practice your homework and you use that 6 p.m. to understand what are the deduction categories and etc. Then we will move into that next topic next week. Looking forward to see you next week. Thank you, everyone. Bye.